Charter Communications CEO Chris Winfrey joins me now. It's the first time we've sat down.
Thanks for having us.
Of course. I'm very happy to talk to you. A lot obviously going on that we followed with your company involving Disney. But I want to start off with Charter itself right now. And just this idea, Chris, after your last quarter, some investors at least questioning whether or how you view yourself in terms of growth.
Sure.
Whether you're still a growth company. You know, before the pandemic, I think you grew revenue at 5%. The most recent quarter, though, ARPU growth very limited, broadband growth very limited, except for rural. Do you still think of Charter as a growth company?
I do. If you take a step back, we're a connectivity relationship builder, a company, if you will. And so we're still growing broadband inside of our existing footprint, despite a one-off temporary difficult market, as well as the new footprints where we're building into the rural communities. The other piece, don't forget, we're growing 600,000 mobile lines per quarter, per quarter. And so we're now the nation's fastest mobile operator, fastest mobile grower in the country. And so we have connectivity relationships that's coming from broadband inside of our existing footprint, inside of the rural footprint, as well as mobile, which is really the seamless connectivity, the convergence, and our unique ability to marry those two together, wireline and wireless, and save customers a significant amount of money with a better product. So the fastest mobile product in the country, right. The fastest internet provider in the country. We do have temporary growth impacts inside of this year.
Well, what are those growth impacts right now? I mean, we talk a lot about fixed wireless, for example.
Sure.
And yet there's this belief that it's only a temporary threat, that eventually it will sort of die down. Do you still believe that? Because Verizon and T-Mobile are still fairly aggressive.
I agree. So the biggest driver that we've had is coming out of COVID, where you had a significant lift in broadband penetration, and we benefited from that. Nobody more than we did. And so you had this tremendous amount of growth. Coming off the back of that, there's not a lot of move activity in the marketplace, which means lower selling opportunities. And unfortunately, right at the same time, you have an inferior, but still new competitor into the marketplace that's taking at a little bit, nibbling at the low end. The reality is that customers' demand for bandwidth is increasing significantly every quarter. And so their capacity is constrained, and it's going to become more constrained as customers use more bandwidth. Honestly, I thought we would be behind that now and be on the decline. But what has happened is that their growth rate, their acceleration has slowed down, and so they're now at a steady pace. So I do think that, within a matter of quarters, we'll be back to a more normalized environment. At the same time, we're not standing still. So this idea of convergence and creating a product that has a structural advantage our competitors can't replicate because they don't have wireline and wireless everywhere they operate.
Right.
In addition to that, we're investing in our own network today to upgrade it to multi-gig and symmetrical speeds at a lower cost and faster pace than our competitors.
Yeah.
And we're investing in rural as well. So we have a lot of different legs of growth that's there. We've already bottomed out. To answer your question, we bottomed out on our growth rate, which we had mentioned on our last earnings call.
You did, I know.
And so, we're coming off the back end of that. We always knew 2023 was going to be a challenging year, an investment year. And so we're coming out with faster growth.
But speaking of competition, I mean, obviously fixed wireless, you've explained your view of that. But these overbuilders as well, even with higher rates, don't seem to be pulling back yet. Does that continue to be a competitive threat?
I heard an interesting theory yesterday from one of our smarter analysts that covers us. And they're not going to announce that they're stopping the overbuild projects. What I think could happen is some of this money that's coming through BEAD, maybe that gets repurposed. It's a better return on investment. These overbuilders, they've never made money when they're doing an overbuild project, and that's nothing new. Every 10 years, somebody says, I have a great idea. We're going to make money with overbuild. We're going to get to a certain penetration, and that doesn't happen. So not only are they not going to be able to get the penetration that they think, but the cost to deploy this overbuild is actually going up. It's higher than what they expected. So there was never return on investment. There's going to be less of a return on investment going forward. And I think over time, they'll have better uses for that money with BEAD and other infrastructure projects coming through from the government. So
do you start taking more price? I mean, there was a view that, you haven't been as aggressive as you might be. By the way, I'm a customer of yours all over the place. So I don't want you to raise my prices anymore.
So that's a perfect place to start. Nobody does, right? And so if you want to grow, the idea that we want to be a growing company. We want to grow and take share in the marketplace, and we want to have growth because it's good for the company, but it's also good for consumers. So if you have an attractive product that's priced in an attractive way that you can bundle together, you're going to not only take our products, but you're going to take more of our products. And as a result, we'll have more penetration on a fixed wireline network. As a result, we have a lower operating cost per customer, which means I can provide you more products at a cheaper rate. That's Charter's strategy. Now, that doesn't mean that we don't take rate increases when we need to. We've been in an inflationary environment. Programming has gotten very expensive, and so in some sense we have to pass that through. But We don't want to because it reflects poorly on the company.
I do want to talk about programming, obviously,
Sure.
but real quick, from a customer of yours for wireless, broadband, cable, all of it at different places as well, I get 3 different bills. Is there ever a day when you may be able to actually consolidate that kind of a thing, back office?
Certain customers, when you're taking Spectrum One, for example, that may be the way. So could we separate the video bill, which has gotten very expensive, and have a connectivity relationship bill? I think that's possibly the case. But when you think about the value that we provide, wireline, internet, video, mobile, and you put all that together, it's a tremendous amount of value, but it's a tremendous amount of product. It could be a very large bill, too. Even though we're saving you money if you were to take it independently, I'm not sure I want to throw that on everybody's bill, because if you take 4 mobile phones and video and internet, it adds up, and we're still saving somebody money. So whether it's 1 bill or 2 bill, the goal is to save money and still look good in front of the customer.
All right, let's talk about Disney and Charter.
Sure.
Came up in my conversation with Malone, as you might imagine, but I haven't had an opportunity to talk to you. Is it a template for what you may pursue with other content providers?
Yes. I mean, simply put, absolutely. We are not going to renew any of our programming deals with somebody who has or plans to have a direct-to-consumer product unless our customers get that for free. Our customers are already paying for that linear content. They've funded these alternate business models, which aren't making any money. And so the idea that they could be sold around or be asked to pay twice, that's not going to work. It's not going to work in the market.
Do you think everybody's gotten the memo? Is there an expectation on your part that when it comes up with Paramount or it comes up with Discovery, Warner Brothers Discovery, you're going to have the same kind of deal you did with Disney? I think
some of the large programmers are already approaching us proactively and say, look, we get where the model's going. Let's get on with it. And I think over the course of the next year, whether it's reactive or proactively, I think we'll have the vast majority of content that matters into this new modernized programming model that creates utility for customers and gives them value back into their video product.
Do you think it extends the life of the video business?
I do. I think it gives us, from my perspective, we have, for those customers who can afford a big expanded package and have all the DTCs or direct-to-consumers included, if they can afford that package, they're going to get a lot more value than they had. We also achieved another objective of ours was to get more flexibility in the way that we package in the marketplace. And so we have flexibility to create less expensive packages for customers and to put DTCs, direct-to-consumer apps, together with those cheaper packages so that customers can select and create value based on the budget that they have. So I think it extends the life. For us, we're indifferent. We don't make a whole lot of money in video. What we're trying to do is provide utility to the customer and have a charge on the bill that we're actually proud to go put there, because we know that the customer gets to choose the content they want, whether it's a direct-to-consumer app.
Are you seeing any traction already with Disney? Is there anything you can share?
Well, we haven't rolled out the Disney Plus and the ESPN until late this year, in the beginning of next year, really in January. So more to come. But we did roll out Xumo, which I think actually, when you put the modernization of the programming agreements that we're doing and the ability to integrate the linear as well as the applications together, and then you take a look at Xumo, which is our joint venture with Comcast, as a platform that really seamlessly integrates that linear and streaming content, unified search and discovery, with an award-winning voice remote and an award-winning Spectrum TV app.
By my parent company, Comcast.
Correct, and it's
technology.
Working great.
I can tell you it is, actually.
That's our primary platform for video distribution. If you combine the utility of the platform and the value that we can provide with combining linear and streaming, for some customers, that's going to create a lot of value, and I do think it extends the life of video, and I actually think it works better for the programmers.
Real quick on the balance sheet, I talked to Malone about this, obviously, capital allocation. Right now, you're spending a lot on CapEx, not as much on buybacks.
Correct.
Why not sort of use free cash flow right now to delever and for buybacks? Why is this the appropriate approach?
Because we are a growth company, and so if you take a look at the growth and you know that you're going to have growth in the coming years, we're still growing today, we're going to grow faster in the future.
The last quarter did not show any growth.
Well, it had 0.7% EBITDA growth, and so, and that was our low point. And so the ability to continue to expand from there, we can see the temporary investments that we made are largely behind us on the operating cost side. The capital investments continue, which was the basis of your question. The capital investments that we're making, we've always, since 2010, when I got to the company, looked and said, our priority of capital allocation is where we have positive ROI projects. That's where we're going to invest first. Secondly, if there's accretive M&A to do that's better than buying back our shares, we'll do that. And we've done that too. So we've invested in our business always. We've done M&A. And then, the leftover is do share buybacks. The value of our buybacks, we're still doing buybacks. The value of buybacks is higher because of the organic investments that we're making today.